Penny Cliff, Education Specialist here at the Georgia Archives. Our presentation today is Money is What Money Does. Today, you will take a peek inside the Federal Reserve Bank of Atlanta's Monetary Museum with Amy Hennessy, Director of Outreach and Economic Education at the Federal Reserve Bank of Atlanta. The Atlanta Fed provides programs in both economic and personal financial education aimed primarily at educators in the 6th Federal Reserve District, that is Georgia, Florida, Alabama, and portions of Mississippi, Louisiana, and Tennessee. Amy's responsibilities include management of the 6th District's programs in community relations, economic and financial literacy, and community outreach, in addition to serving as curator of the bank's Monetary Museum. Before joining the Atlanta Fed, Amy taught high school economics for 24 years in Augusta, Georgia. From 2006 to 2009, Amy served as an AP economics reader for the College Board. She is a graduate of the Education Policy Fellowship Programs class of 2012 to 2013. She was the Georgia Council on Economic Education's 2009 Economics Teacher of the Year and is the Federal Reserve Bank of Atlanta's 2017 President's Award recipient. Amy graduated summa cum laude with a BA in History from Augusta College. Welcome, Amy.
Thank you, Penny. It's such a pleasure to be with you today. As Penny indicated, it's going to be my pleasure to help you take a peek inside our Monetary Museum. We are located, as you see here with this picture, this is the entrance to the Federal Reserve Bank of Atlanta. We are located in Midtown at the corner of 10th Street and Peachtree Street. Please note that the views that I will express today are those of mine. They are my views only, and they do not reflect the views of the Federal Reserve Bank of Atlanta or the Federal Reserve System. Before we take that peek inside the museum, I'd like to give you a little bit of an overview. I think it's important for you to understand a little bit about the Federal Reserve. So the Federal Reserve is the United States Central Bank, and as such, we have responsibility for our nation's monetary system. How is the Federal Reserve organized? I want you to think of us as being organized in 3 parts. You will see on the left of the slide the Federal Reserve Board of Governors building in Washington, D.C. And the Board of Governors has oversight over the Federal Reserve System. And then we have 12 regional reserve banks located throughout the system as indicated by this map. And as Penny indicated, we here in Atlanta are responsible for what is called the 6th Federal Reserve District. And as she indicated, that includes the states of Georgia, Alabama, and Florida, and parts of Tennessee, Mississippi, and Louisiana. The third part that's essential to our structure is the Federal Open Market Committee. This body is our policy-making body, and actually is the body that is most often makes the news. The Federal Open Market Committee is composed of the 7 governors when we are at full complement, based out of the board in Washington, D.C. And you may have followed the news yesterday. The Senate officially confirmed the next term of our chair, Jerome Powell. In addition to the governors, all 12 of the Federal Reserve Bank presidents serve on the committee. The New York Fed Bank president is a permanent voting member. And then there are 4 other presidents that rotate annually who serve as voting members. But all 12 presidents and the governors meet 8 times a year, about every 6 weeks, in Washington, D.C. to develop and set the committee's policy, our monetary policy. So in addition to the structure of the Federal Reserve, I think it's really important for you to have a basic understanding of what the Federal Reserve does and what I like to think of as how the Federal Reserve, our functions and our responsibilities affect all of us on the regular without any of us necessarily being cognizant of them. So first and foremost, as the Central Bank of the United States, we are the fiscal agent for the United States government, for the federal government, which means that we provide the banking services for the US government. So we take in receipts and we issue payments. So we've just passed tax season. If you filed your taxes and received a tax refund, we issue those refunds on behalf of the United States Treasury. We also do all of the issuance, transferring and redemptions of US government securities on behalf of the United States Treasury. But remember, we do monetary policy. We are responsible for the nation's monetary system. The Federal Reserve is not responsible for telling the government how to spend the money, the federal revenue, or how much to collect in tax revenue. That is the responsibility of the US Congress and the President. So we conduct monetary policy. As I've indicated, the committee is responsible for making sure that there's enough money and enough credit available to keep the economy healthy. And it is important that I stress that when, in order to keep the economy working effectively, that means that we have to have enough money and availability of credit to keep it running. I like you to think of that as kind of like keeping enough gas in your car to keep your car operational. And when you, in essence, put the foot on the gas pedal, you're going to accelerate. So if the economy needs to be stimulated because it's sluggish, you want to accelerate by putting the foot on the gas pedal, stimulating, helping to get more money and greater availability of credit out into the economy. Conversely, when the economy is overheating, as is indicated if you're following the news recently by the monthly inflation readings, you want to take the foot off the gas and slow the forward trajectory of the economy. And so you want to pull back on how much money is available and the availability of credit by bringing those interest rates up so that we can slow that growth of inflation. And so that's essential. And all monetary systems globally have to be managed. And for us here in the United States, the Federal Reserve is responsible for managing our monetary system. We were created as an organization, as an entity by the US Congress with the passage in 1913 of the Federal Reserve Act. That was signed into law by President Woodrow Wilson. He actually signed it December 23rd at 10:30 p.m. And then the next year, in 1914, an organization committee was put together to decide how to divide up the country. The Federal Reserve Act actually stated that the committee could create as few as 8 districts or as many as 12, and they ultimately decided upon 12. And that is why, going back to that map, if you can think of that image, the vast majority of the district banks were formed east of the Mississippi River, because in 1914, that is where not only the majority of the population lived, but where most of the capital, financial capital, resided. And in order to create the 12 district banks, you needed to, the way the act worked is that banks in the district would capitalize each of the 12 district banks. So the Federal Reserve Act authorizes the Federal Reserve to perform the functions as stated here, the verbiage here, to promote and maintain long-run growth of, as I've said, the monetary and credit aggregates in order to push for the economy's long-run potential to increase production, thus effectively achieving the goals of maximum employment, stable prices, and moderate long-term interest rates. Something that makes us different than all of the other central banks around the world is that in addition to the role of promoting price stability, which all central banks are charged with, in 1978, Congress amended the Act through the Humphrey-Hawkins legislation to add on what we call the second part of the dual mandate, which is to promote maximum employment. And you see here in August of 2020 at Jackson Hole, Chair Powell announced our new framework for price stability. And so we have a target inflation rate that over time is attempting to average 2% annually. And our maximum employment piece is affected, unlike being able to manage the monetary system, there are other forces at play that contribute to the employment piece of the mandate because of factors in the labor markets that are outside of the Fed control. But ideally, we are striving to achieve an unemployment rate somewhere between 3.5% to 4.5%, as indicated on this visual. Just as a quick reminder, before we go on, the responsibility of monetary policy falls to the Federal Reserve's Open Market Committee. And I've already indicated who are the members and who are the voting members. But fiscal policy, that spending, those spending decisions and tax policy issues are handled by the United States Congress working with the United States President. So monetary policy is one of our primary functions. A second primary function is our supervisory and regulatory function. So Congress will pass legislation that affects depository institutions. And then there are attorneys and individuals who work at the Board of Governors who will write the rules that help those depository institutions to be in compliance with the regulations. And so our board helps to write and enforce the rules for banks, and then located throughout the entire country in all 12 of the district banks, we have supervisors, bank examiners, who have responsibility for ensuring that financial institutions, depository institutions are in compliance. And our primary focus through our supervisory and regulatory function is to promote safe and sound financial institutions to ensure that I like to think of it as that all essential role. We take our money and deposit it in banks or credit unions with the goal of keeping it safe, but also with the goal of establishing that relationship so that not only when we come to withdrawal, but when we come to potentially borrow for big purchases, such as for auto loans and for home mortgages, that we have that relationship. We want to make sure that those institutions are making safe and sound loans and are weighing risks relative to their balance sheet in order to keep our money that we have deposited with them safe and sound. We also, the Federal Reserve is responsible for overseeing what we call macroprudential supervisory role to promote the overall stability of the broader financial system. And then we are tasked with, through legislation called the Consumer Reinvestment Act, the Community Reinvestment Act in the late 1970s, with making sure that depository institutions are lending to low and moderate income communities at reasonable rates of interest. So we ensure through our supervisory role that there is fair and equitable treatment of all consumers. So that's our second function. Monetary policy, supervision and regulation, and then a third overarching function is to foster our payment system and to ensure that our payment system is stable. So we want to assure all that our payment systems have integrity, are operating efficiently, and are accessible to all. And this not only involves payment methods, but also settlement systems to ensure that the efficient crediting and debiting of accounts through payments are occurring. That's essential. And so we have many different roles in payments. Not only do we have roles in issuing on behalf of the United States Treasury currency and coin through our, from the Bureau of Engraving and Printing in DC and Fort Worth, and the mints located in Philadelphia and Denver. So through the Treasury to us, and through us to depository institutions, to keep that flow of coin and currency into the economy. But we also are responsible for helping with the settlements of online payments, such as you probably all have some type of online payment through the automated clearinghouse function and online banking. So if you have your mortgage drafted from your checking account online, that ACH transfer is going to be facilitated either by us, the Federal Reserve ACH process, or through the clearinghouse. There really are two options for depository institutions to use. So that's essential. And here you will see our role in processing currency. I know that oftentimes people will walk by our location in Midtown, this big marble building, very stately, and in our view, architecturally, a very stable presence in the community to represent that we are a foundation for our community. And they are unaware that there's millions and millions of dollars being processed during the week in our cash operations. And what you see here is a picture into our cash operations. Literally, imagine you're standing looking at what we call, George, an automated guided vehicle, literally just an automated forklift moving currency that's been either received in from armored carriers that are coming from banks or credit unions into our vault, or that is bringing money that's been processed by our high-speed processing machines into the vault, because George is headed, the reason I'm doing this is he's headed into our vault, and you can see that with this picture here. So this is another image. Imagine you're standing there, and this is the view that you would see if you were in our museum. And those doors, now that's the carrier called Alex headed in to those doors. I will say, sadly, George and Alex are no longer with us, nor is George, because they were replaced. Those are our old ones. We actually now have AGVs that have taken a bump up and are operated by lasers. And the lasers, the new ones, have a top hat that emit lasers off of these. They kind of look like mosquito bug strips that you hang up, but the lasers guide the vehicles, and they actually move more rapidly than the old versions. These used to move on magnets that were in the floor. At any rate, what you're seeing here is that daily during the week, we are processing currency, again, on behalf of the Treasury, to ensure that the currency that is flowing out, that's really the lifeblood. I want you to think of the payment system as the circulatory system of the economy that's flowing through the economy. We make sure that currency stays fit to be in circulation. And what that means is that it has the integrity, that the security features that have been designed into the currency to protect against counterfeiting are still viable, that people can actually still hold a bill up and see the watermark, hold it up to the light and see the watermark, that like this 100, that it has the shifting, the blue shifting ink, so that the color shifting ink and the strip, so that you can actually guarantee that you've been passed from a retailer, actually genuine US currency and not counterfeit. In addition to processing to make sure that notes are fit, we process to remove any counterfeits that have actually not been picked up by a retailer or by a depository institution before they've come to us, and we remove those notes. Those notes are not shredded. All notes that are worn and damaged are shredded. All notes that are still fit are processed, and all notes that are potential counterfeits, we hold back. We actually collect them in small safes that are inside on the top level of our vault, and we turn them over at the end of each week to Secret Service. And this U.S. Secret Service then conducts the investigations of the potential source of those counterfeits. But to wrap, it's essential for us to continue providing those functions to support our monetary system through monetary policy actions, promoting financial stability through our supervisory and regulatory role, and then keeping our payment systems safe and efficient and accessible through those functions. So that's an overview. Now we're going to turn to our district. This is a map of the 6th district, and the reason I'm sharing this with you again is to emphasize that we have our Monetary Museum here in Atlanta. We also have museums at our locations in Jacksonville, in Miami, and New Orleans. And all 4 of those locations still have cash processing functions to, again, be the conduit to get that currency and coin out into circulation. Birmingham and Nashville, those locations, those branches used to have cash functions, and they no longer do. So they've been downsized to very, very small staffs and no longer have to have law enforcement. So we closed those museums as well. And their valuables, those assets, came to Atlanta, to our museum, and then also the cash function came from Tennessee, from Nashville and Birmingham to Atlanta. So we're responsible for processing all of that, which comes from Alabama and Tennessee now, out of Atlanta. But I wanted to emphasize, in 1914, after the organization committee had made their final decisions, and they went all over the country, and there were 37 different cities that were considered to be one of the district banks, and bankers voted on their preferred cities, and they were looking at what banks could capitalize each district, and Atlanta was chosen. A very close second was New Orleans, but Atlanta was chosen to be the district headquarters in 1914, and so we have a museum, and I'm going to give you a little peek at our gold bar exhibit, and we're going to come back to, so foreshadowing, here is a solid bar of gold that if you come to our museum during the week, Monday through Friday, 9 to 4, we are reopening in June after having been closed due to the pandemic. But you can actually come up to this exhibit and use the handle to pull the bar of gold. That's a solid bar of gold that weighs 27 pounds and a few ounces. And that picture is an image from the New York Fed gold vault. The only gold vault in the entire Federal Reserve System is in New York, and the vast majority of the gold that they have in their vault is from foreign nations, and much of it was deposited after World War II, due to, in large part, the new relations in terms of international settlements that had been established out of the Bretton Woods Agreement. But we will come back to our gold bar. But lo and behold, New Orleans residents were very, very upset that they had not been chosen to be the district bank. But the very next year, in 1915, New Orleans became the very first branch in the entire Federal Reserve System, and as such, has been very proud to be part of the 6th District. Here is, just as a little teaser, because we're going to go back and focus on our museum, but here's a little teaser. This is an exhibit that we have at the New Orleans branch, and what we have in this case tells a fun story, because you have pictured here Henry Clay on the left on the Miners and Planters Bank 10 note, and you have Andrew Jackson pictured here on the $5 note, and then you have this Bank of the United States note out of Philadelphia, and technically it was the 2nd Bank of the United States, signed by Nicholas Biddle. And what happened is we tried to have a central bank under Alexander Hamilton, and Congress chartered the first central bank, and it existed from 1791 to 1811. But when the 20-year charter was up for renewal, it was turned down by the Congress. They voted against rechartering. And then we had the War of 1812, and there was an obvious necessity to get the economy back on track and get some inflation under control, etc., and for just overall economic activity. And so Congress chartered a Bank of the United States for a second time. And that bank lasted from 1816 until 1836. And Jackson basically went head to head with the president of the Bank of the United States, Nicholas Biddle. Jackson was very much an opponent of the centralization of authority that was represented by a central bank. He was very distrustful of paper notes, had been involved in a bad land deal, and received promissory notes, and so he was opposed. Henry Clay, who had originally been in opposition of a Bank of the United States, became an advocate for it and defended in Congress the rechartering of the bank. And what ended up happening, many of you may know from your history class, Andrew Jackson as president vetoed the rechartering of the 2nd Bank of the United States, and therefore we were without a central bank from the middle 1830s until the passage of the Federal Reserve Act and the creation in 1914 of the new 12 districts. In 1918, shortly after Nashville was named a branch, they created a branch in Jacksonville, and I just shared this. This is it's a replica. It's an exhibit-sized version of the $100,000 note that was a gold certificate that was minted printed for a very brief time at the end of 1933 into the early into January of 1934, and there were at one point over 40,000 of these notes that were being used to transfer funds between the 12 district banks, but the $100,000 gold certificate never circulated amongst the general population. The largest note to ever circulate amongst the general population in the US was the $10,000 note. And I draw your attention to the exhibit there, that machine that sort of looks like R2-D2, I think. It's that little, almost looking like a little robot, is an old bill sorter. So today we use high-speed processing machines that can literally process over 100,000 notes per hour, and we operate at our facilities 22 hours out of the day, so we have 2 shifts. This is the old bill counter, and believe it or not, it was still being used as recently as 1996 in Federal Reserve banks, but is used no longer. Now all the banks have high-speed machines. And then here's Miami, a picture of our branch in Miami, and Miami is the last branch in the Federal Reserve System to be created. It was a cash depot of the 6th District, and in 1975, it was named as an official branch. So we have the oldest branch in the system and the youngest branch in the system, and the 6th District has the most branches in the system with 5 branches. And this is just a fun look at a mural that was recently painted by students from a local university to represent the international connectivity of our folks in Miami, because we have our examiners based in Atlanta, and then we actually have examiners based in Miami who are supervisors for Latin American banks that have offices here in the United States. So Miami does a lot of supervising of those facilities, of those institutions. And then you have that newly designed $100 bill. That was a commemorative print that was done and hangs on the wall there in our museum in Miami. So now we're going to talk about what money is. What is money? And truly, money is what money does. What does that mean? Money serves, in whatever form it takes, as a medium of exchange. We, all of us, in order to facilitate exchange, the exchange of goods, the exchange of services, need to have a functioning, acceptable, valued medium of exchange in order to ensure that those transactions will be successful. So money that functions effectively functions as a medium of exchange. That's the most obvious example of what money does. But money also is essential as a store of value. So I like to think that if I wear a jacket during the winter and I inadvertently leave a $5 bill in that jacket and I put it up in my closet and I forget about it and I go back the next winter and I put my jacket on for the first time and I put my hand in the pocket and lo and behold, there's a $5 note there. I'm like, oh, I know that essentially in that year's time, that $5 note, that $5 bill will still essentially buy the same goods that it bought the year before, essentially, because our role as the central bank is to promote price stability, and money, for it to function effectively, must be a store of value, a store of our purchasing power, of our ability to use it to maintain the purchasing power. Then it's also very essentially a unit of account. We know when we go to the store and we see a price tag that a pen may have a price tag of $2.50 and an iPad may have a price tag of $700, and we understand the difference in value as represented through the monetary unit. It's that unit of accounting for us. We don't have a long listing of all of the different types of items that we could trade and exchange for those goods or services. What you're seeing here, these images, these come from our ring case, and I just want to draw your attention first and foremost to the Yap stone. That's a very small version of a Yap stone. Yap is an island in the South Pacific. The stone is limestone material. It actually does not come from the island of Yap. It comes from the island of Palau, which is about 150 nautical miles from Yap. But islanders hundreds of years ago actually would carve the limestone, and they oftentimes carved it in the shapes of animals and stuff, but then they began to discover that it was easier to carve it as a round disc with a hole through it, and that they would put it on these long poles, and then they would use their canoes to come back from Palau to Yap. And that Yap stone is money on the island of Yap. It's gift money. Most Yap stones, and if you go to the Smithsonian, you can see them. You should Google Yap stones, are very, very large, and they are wedged into the sand and are positioned next to the islanders' homes. And they understand, they have a collective memory, one generation to the next, of the transfer of value of the stones from one person to the next, oftentimes used as bride price and so forth. That's just one glimpse of something really fun that we have on display here in what we call our ring case, which is the way we tell the story of money. And that there are 16 cases there, and we use these cases to tell the story of how we moved in our history from, and I mean all of history, all of humankind history, moved in civilizations from bartering with each other, from exchanging goods, to using a monetary system and using a money system. And the key difficulty as societies became more and more complex and began to trade beyond their most immediate area is that in order for barter to be successful, you have to have a double coincidence of wants. I have to want what you have, and you have to want what I have in order to make the exchange viable. And what begins to ultimately happen is if the person who holds the bunny doesn't want the fish, they're going to have to find somebody who wants the bunny, and you're going to take whatever they exchange with you back to the person who has the fish, and hope that the person who has the fish wants what you now have. The bunny is the only real thing in our museum that I mean, obviously the artifacts are real, but that was at one point a live bunny. At any rate, so we use this ring case to tell the story of money and how we moved from commodity money, things like salt and salt cubes and tea blocks in China, to various other examples of commodity money where you have an intrinsic value. A tea block can be actually used as a medium of exchange, but it also can have parts of it broken off to make tea, and you can consume the tea and get value from consuming the tea. We move from barter to commodity money and to different types of representative money. And I shared this picture of one of our early coin case, because those are Ashanti weights. Those are weights, and then there's the scale that was used in West Africa by the Ashanti people. They have various different weights, and they were used for the gold merchants in the market to weigh out the gold to establish the value. It's very essential to create a stabilization and a standard unit of measure in order to ensure that you have representative value one weight to the next. That's very essential as we advance economically. And finally, I will say here in the ring case, this is one of, I just love talking about this, what is represented here. So you will see we have what we call our hyperinflated notes case. That's case 16, and it's at the end of the story because a primary function of any central bank is to promote price stability, so that our purchasing power is has integrity 1 year to the next. When a monetary authority, a manager of a monetary system, loses all control of that, when they print more money and get more money into circulation than the economy is actually producing through their productive resources and the real output in the economy, you're going to cause your money, your currency, to lose value. And you will have what we call hyperinflation. And that's devastating to an economy. That brings an economy to collapse. So on the left, you see here a German mark, a 3 million mark from Germany in 1922. When after World War I, during the Weimar Republic, you had hyperinflation. The Germans were experiencing extreme hyperinflation. And what you see in the middle case here, the middle picture, is that it got so bad in Germany during that period of hyperinflation that they literally ran out of the paper upon which the notes were printed. And so they had to create what is called noodgeld, emergency money. And so you see here a velvet mark and a silk mark that were used as emergency money because they had just produced way beyond what their productive capacity as an economy could support. And then on the right, a very recent example, well, I say very recent, it's back 2007, it's getting less recent, and we've got other examples like in Venezuela right now currently, but in 2008, this is $100 trillion Zimbabwe note. Anytime you start seeing 12 zeros on a note, you know you're in trouble. You know your economy is experiencing hyperinflation. And so I share that. You can actually go out and Google and get a set of these Zimbabwe notes. Ultimately, what happened is they resorted to barter, and then they ultimately had to stabilize the economy in Zimbabwe. They had to begin using the South African rand and the US dollar, and they still do to this day. This is fun. This is in another portion of our museum. We are very proud of the fact that we have one of the few complete collections, complete sets of the gold coins that were minted at the Dahlonega Mint in North Georgia that was operational from the mid 1830s till 1861. And what had happened, I mean, we all hear about the gold rush in California that occurred in 1849, but before that, and everybody who's a resident of Georgia should know that we had a gold rush here in the North Georgia mountains in 1829, and people rushed in, and again, you're trying to figure out how do you use gold as a medium of exchange, and you've got the gold nuggets and the gold dust, and so you have some jewelers who begin, metal workers who begin to mint their own coins. That single solitary coin that is above the Dahlonega set is by a jeweler named Templeton Reed, who actually was from Milledgeville, Georgia, and moved in this time up to the Dahlonega area to produce coins. And that's a very, very rare, that's a $2.50 coin. But at any rate, what ultimately happened is the US Congress passed an act to build 3 mints, one in Charlotte, North Carolina, one in Dahlonega, and one in New Orleans. And then after that, those mints operated for a while and were minting coins on behalf of the US Treasury. I shared this. I'm at the archives. Archivists, thank goodness for archivists. They preserve, they conserve, they save our history. It's so essential. And so I share here, this is a picture of a coin that's in our collection. It's a copper cent from 1793. It's beautiful. I'm sorry it's not as clear, but it's the flowing hair type. So if you want to look up the flowing hair type of coin, they're quite beautiful. But I share this because this is an example of our Past Perfect software system. We have a vast collection of coin, historic currency, and other artifacts, and we have to keep that all in inventory. And then I just wanted to say that we have very, very strict custody controls and dual controls to ensure that we are safeguarding our collection. We hold our collection near and dear, and we've developed the collection with the thought that we are servants to the US public, to the world. I mean, anybody from anywhere can come in, walk into our museums in Atlanta and New Orleans, and we want to share that. We are public servants, and we want to share all this, so we want to keep it very safe. Before we go on to, we're going to go back to that gold bar, I just want to say money today is very different than what is represented, what you've seen some images of from our story of money ring case. Money is predominantly today currency coin and bank deposits, demand deposits, checking accounts, so it's electronic. So it's taken many shapes and forms over time, and as we all know, there's an ongoing evolution. Just remember Money has to have those three functions. That's different than a payment method. I just want you to remember, a credit card is an unsecured loan. It's a method of payment. It is not money. Our money is our currency, our coin, our checkable deposits, traveler's checks. Now, here I am at the archives. I've been so excited to share this. This is the 6F Messenger. This is from July 1st of 1968, was the Atlanta Fed's newsletter for internal, for employees for years and years. And this is these are three of our officers who helped to develop the Money Museum. And we are very proud in the system. We had the very first money museum of any of the 12 banks in the system. And it was because of our president at the time, Monroe Kimbrell. He was our president from 1968 until 1980. And he truly believed in what I had just said, that it was so important to share our historic currency and coin collection. It generally would circulate. We'd offer it out for banks that were having grand openings and so forth, and we'd put some on display for employees to enjoy. But they began working in 1968 and opened the museum in 1969. And I'm coming back to the gold bar exhibit because what you need to know is we had the gold bar on permanent loan from the United States Treasury. We didn't go out into the market and buy a bar of gold. We actually acquired it from the United States Treasury, and we had the first gold bar in the system. And here you see evidence of communication. So these, what I'm getting ready to highlight in these next few slides are the communications that went back and forth to authorize our acquisition of the gold bar that we've had since 1971. And how there was ongoing communications and requests and a formal procedure in order to ensure that we could get a bar on loan from the Treasury, and we had to do so through the New York Fed, which was holding gold bars. And so here you see the reference to the fact that the gold that is held is through the Exchange Stabilization Fund of the United States Treasury. And then you see these next few communications. We ultimately were granted the authority, and the signature here, or the name here, I just want to highlight that. That is indeed Paul Volcker. And for those of you who are aware of Paul Volcker at this time served as the Undersecretary of the Treasury for Monetary Affairs. But ultimately, he became the chair of the Federal Reserve Board of Governors, and Paul Volcker is the hero who helped, through his leadership of the committee, to bring down the inflation that had gotten so out of control in the 1970s and early 1980s in our history, in U.S. history. So we hold this near and dear, that Paul Volcker is the person that authorized our receipt of the gold bar. And then again, here you see how all of that worked. And I just want to say that initially it went on our books at $13,837.98 because it was valued at $35 per troy ounce of fine gold. And it, as you can see there, it is 395.45 troy ounces. It is now on our books, and these documents continue to evolve. This is in 1975, where we say our President Monroe Kimbrell is asking if we could permanently have it instead of having to have it still be on the books of the New York Fed. And at first, this one says no, he's turned down. He asks, and it takes then into 1976 for him to be told no. But ultimately, here we are in 1978, President Kimbrell kept trying, and ultimately we were granted approval to take it on our books. So instead of having to facilitate everything through the New York Fed, we took full ownership of, or excuse me, full responsibility in the accounting of it as a permanent loan to us, the Federal Reserve Bank of Atlanta. And you see that it identifies all the steps that we're going to have to do and the forms, the Treasury forms that we're going to have to report it out on each month and so forth. But the key thing is that when we finally assumed responsibility for the gold bar, it was then valued at $16,693.43. And I routinely, as part of our custody controls, have to sign off on our general ledger. It is still on our books at $16,693.43, even though based on what the troy ounce is going for in the market today, its actual value, market value, is over $800,000, but we still hold it on our books at $16,000 and change. And you see here these early forms. And then finally, I bring this to your attention. In 1979, President Kimbrell wanted us to get a gold bar for Miami. He was committed to having museums all throughout our district. And once Miami was named a branch in 1975, the wheels started turning. And here again is continued communication to that end. And ultimately, they sign off. And I find it so fun. They use the rationale, or President Kimbrell uses the rationale that it will greatly enhance the exhibit and generate interest in those viewing it, which indeed it has. And unfortunately, I was searching all over in preparation for my talk today to get the picture of Miami's gold bar. And you see, that's a picture we've got of some of our gold coins that are on display in Miami, and it's in a case, and there's that top right-hand corner of the gold bar that's in Miami and has been there since 1979, much to everybody's pleasure who comes through and views our collection. So I will stop there and ask Penny if there are any questions from the audience. Mm-hmm.
There's some questions. Somebody is typing in one right now.
Sure.
But we have some questions before I see this. Will there always be 12 districts, or can new districts be added?
That's an outstanding question. We are a creation of Congress. The Federal Reserve Act has been amended multiple times in the more than 100 years of our history. A very significant change in the Federal Reserve's responsibilities came with the two National Banking Acts in 1933 and 1935 during the Great Depression. And as I mentioned already, we got the dual mandate, the maximum employment piece, in 1978. The most recent significant change to the Fed came with the after the most recent financial crisis in 2008. With the passage of the Dodd-Frank Act, the Wall Street Reform Act. And so certainly Congress has the authority to open up the Federal Reserve Act in essence and change how many districts we have. But again, that would have to be an act of Congress with a sign off by the president. Mm-hmm.
We have several people typing in questions.
Uh-huh.
But another question is, how do you keep the flow of coin and currency? And what about if people start hoarding?
Well, so that's a great question. And actually, I wouldn't say that it was necessarily hoarding, but you may remember, and you can, again, Google, go out and find news stories from the beginning of the pandemic and the shutdown in the spring of 2020, when people were staying home and we're not going out doing normal daily activities like we had been prior to the pandemic, that during that summer and into the fall, there was a coin shortage. And much of that was due to the fact that we just didn't see normal economic activity occurring. So many people began to use other forms of payments, person-to-person payments, cash apps, online payments, and so forth, credit cards, debit cards, and people weren't out using coin and cash. And also, businesses weren't taking them because of being concerned. So you started going places and they wouldn't take cash at all, and they wouldn't make change, and you'd have to use the QR codes and so forth. But we've worked through that at this point. But oftentimes, let me add one other thing of interest. I don't know how many people realize when we have a severe natural disaster, like many of the hurricanes that have hit New Orleans, you know, these are in our district. So New Orleans, come through Florida, the coast of Florida and so forth, or the wildfires out in California. When you have devastating natural events like that, we go into overdrive. Especially like with hurricanes where you're beginning to get advance warning, our folks go into overdrive in ensuring that there's enough cash to get out there, because oftentimes businesses won't accept anything other than cash. And so people come to banks to withdraw cash to be able to buy things like generators and water and so forth. So that's a very essential function that we perform.
Okay, would you explain how I was able to have a savings account in the 1980s at a rate of 12%, and now I cannot even get 1%? Oh,
that has, so remember Paul Volcker, that icon who helped bring down that period of very high inflation? The reason that he was able to successfully tackle that the committee was able to successfully tackle inflation is because they took, so the committee's target rate is called the federal funds rate, and that is the rate at which banks borrow from each other, reserves from each other overnight, rate of interest. And what happens then is that affects, that works through into the economy through to the prime lending rate, and then from there other interest rates. And what happens is when you're trying to get inflation and high levels of inflation under control, you bring up interest rates, and they're going to come up. And so the federal funds target rate went up into the double digits. The prime lending rate peaked at like 21%. Home mortgage rates went up very high. Well, if interest rates are high on borrowing, they're also high on your savings accounts. And when the economy, like we've been in this period prior to the pandemic and coming out of the Great Recession and the financial crisis, when the economy was in the Great Recession, literally the worst economic recession since the Great Depression, interest rates are going to be, we kept the federal funds target rate, the committee, at 0 to 0.25 percentage point for years on end to try to stimulate the economy, because we've been in the single worst recession since the Great Depression. And again, when interest rates are near 0, your savings account interest rate is going to be near 0. So,
thank you. Can I have a comment? I just said a comment, please, on the relationship of Bitcoin to Federal Reserve functions.
So, any type of cryptocurrency is viewed as a capital private asset. It is not viewed as what I just talked about, money. So it's a payment method, but it is not officially part of what we call the money supply. So I named what is the money supply: coin, currency, checkable deposits, monies and savings, traveler's checks. But and your debit card, which just like a check, can draw money out of your checking account. But crypto is just a form of a payment method. Now, the other thing about crypto, Bitcoin is a cryptocurrency, is that it is incredibly volatile. So let's go all the way back to when I was talking about the functions of money. What must money do? It must be a medium of exchange. Well, sure, crypto can function as a medium of exchange if it's ubiquitous. If every retailer accepts it for payment, If all the transactions that you're going to try to affect for buying goods and services will accept that as a medium of exchange, and not only accept it, but have the ability to facilitate that transaction. That's why you have to swipe the card or insert the card or tap the card. You have to be able to facilitate that transfer. So it needs to be a medium of exchange, but it also money needs to be a store of value. It needs to know, you need to know that the purchasing power associated with that is going to be held stable. And all you have to do is look at the market activity for cryptocurrency to see that it is, even in one given half-day period, it's tremendously volatile. And that makes it less readily able to function as a secure money. So it's not, it's just a payment method. It's like gambling in many ways when you invest in crypto. Yes.
How often are security features changed in currency? We've all seen people hold up the currency to the line.
Yes, that's great. There's a cycle. So that is done by the U.S. Treasury through the Bureau of Engraving and Printing, and they work on that in cycles. So you know, a 10-year period. They well in advance of when it will be rolled out and issued by us on behalf of the Treasury. Years and years before that, they've started the process of looking at the enhancements that will be necessary to protect against counterfeiting. So, we've got, you know, the different bills. So the 5s, the 10s, the 20s, the 50s and the 100s. So they rotate on a cycle. And you can go out to the Treasuries, to treasury.gov, or even to the BEP's website and see, get information about that schedule.
How do the stores know about the new updates? Is it something?
So retailers learn that information both from the Treasury, from depository institutions, and so forth. Yeah. Mm-hmm.
Somebody is asking, do you predict that the interest rates will increase?
So remember, if you were with us at the very beginning, I had my disclaimer that what I'm saying is only my view, and I'm not speaking on behalf of the Federal Reserve Bank of Atlanta or the Federal Reserve System. We have had 3 meetings of the Federal Open Market Committee this year, and at the one in March and the most recent one last week, the committee voted to raise the federal funds target rate. The first vote was by 1/4%, so 25 basis points, and this most recent increase was 50 basis points. Chair Powell, at his press conference immediately after they issued the statement, after the meeting, indicated that the committee is open to doing another 2 50-point basis increases at the next 2 meetings in June and July. So we will. I would anticipate that the committee is committed to anchoring inflation expectations to help address the to get the inflation slowing and on a downward trend.
Okay, we'll end with this one, and if other people have questions, maybe they can contact.
Oh, please, yes. Mm-hmm.
Okay, when will the Monetary Museum open?
Yes, so we are targeting June 6th, which is a Monday, but much of that is going to be based on whether our technician who's ordered some parts that are necessary to get some of our exhibits up are come in time. But we have on our website, atlantafed.org, under, you can search for our tour information for the museum. We keep that updated. So if it was to be sooner, we'll put that out on our website. If it's to be a little bit later, we'll again put that on our website.
Yeah. Those are good questions anyway.
Perfect question. And thank you, Penny, very much for having me today.
Thank you, Amy, for giving this wonderful, informative presentation.
Oh, you're most welcome.
I know. I'm going to look forward to coming visit.
Oh, yes. I hope you do come.
So this presentation is going to be uploaded to our YouTube channel, Georgia Archives. So if somebody's missed it, they couldn't come, go to our YouTube channel. There's going to be other lunch and learns and other presentations with events on our channel. We do have some upcoming virtual events. They're going to be listed on our website, so check our website with the links to join. On Friday, May the 27th at noon, Georgia Archives conservator Sigourney Smuts will present a program in our 4th Friday from the Archive series. So kind of look for that. As I said, just go to our website and look for that to find out information. Our June 10th Lunch and Learn presentation at noon is Cobb County's Commuter Railroad, the Atlanta Northern Railroad, by Todd DeFeo, founder of the DeFeo Group, author and railroad enthusiast. So thank you so much for joining us again and watching, and we'll see you next time.